Welcome back to Palisade Radio. I'm your host, Tom Bodrovics, and joining me today on the program is an absolute legend in this space. He's the silver guru, and his name is definitely synonymous with silver. Talking about David Morgan. He's the publisher of themorganreport.com and the author of the Silver Manifesto and How to Make and Keep Big Money from the Gold and Silver Shockwave. How are you today, David?
I'm doing well. Thank you very much for having me. It's been a while.
It's great to have you back. I thought we could start by, there's a saying that you have, and it's more pertaining to the macro picture. You were saying recently that the reset has started and we are on the backside of the power curve. Obviously, you have a history of being in the aviation space, and I think that's a great analogy for what we're seeing from the Fed.
Yeah, I can elaborate. So it's something that most people, unless they fly, and even as a pilot, you might not intellectualize it and say, well, if I got all this power left, and power pretty much can get you out of a lot of close situations, just like an accelerator in a car. I mean, if a car's coming at you and you got a lot of throttle left, you might be able to speed up and avoid an accident and that type of thing. But in aviation, there's more than just the power. There's the aerodynamics that go with it. So the backside of the power curve means that you have overextended the ability of the airplane to fly. And no amount of power is going to rectify that situation. So that's the analogy for we've already printed all the money that's worked up until this point. And now from this point forward, no amount of money printing from this point going forward is going to help at all. It may help on an individual level, meaning that, this referendum that the government has provided for people. I'm not saying I'm against it. I'm not saying I'm for it. I'm saying it's probably helping temporarily, but I'm looking at the big picture. The failure of the economic system as we know it, or probably more precisely the failure of the monetary system as we know it. So all of this money printing from this point forward is only going to exacerbate the problem, make it worse, and cause the failure to basically accelerate. Going back to the airplane, when you first get to that position, that point of no return, probably in the mind of a lot of pilots, experienced pilots as well, I got it. They just cram all the power that's left in the jet or the prop plane. And in that moment, probably think, that was close, but I'm going to be okay. But you're not. And I think that's the analogy. I hopefully explained it well, because unfortunately, I'm not talking about an individual basis being able to pay their rent or buy food. I'm talking about the overall picture of the structure isn't going to work anymore.
Absolutely. And I think that's a great analogy. You're also speaking about in an inflationary depression, why putting your money into the stock market won't preserve your purchasing power. So could you speak to us a little bit about why that could be in this coming shockwave?
Certainly. I'm starting to revise my opinion on the stock market as far as is it going, higher or lower. And in advanced cultures, or I should say advanced economic system, usually the bond market will take care of everything. It's much bigger than the stock market. And interest rates are really a guide to what's happening. But the interest rates have been controlled by the financial repression that's taken place in the central banking system globally for so long that they basically have a handle on it. Not to say that at some point interest rates won't rise on their own as possible. So I made that background to say this. In situations where there is a hyperinflationary depression, stocks are run to because people know that it's better to own a part of a company than it is to keep their money in the bank. And so share prices get bid up higher and higher and higher. The problem with that is, one, it's better than money in the bank. That's a fact in almost all cases. But it isn't sufficient to keep you ahead of the inflationary depreciation of your currency. So even though your stock has doubled, the purchasing of power of your fiat has been cut by 400%. So you've got, made 200% in the stock market, but you've lost purchasing power by 400%, that type of thing. And I'm not sure we're getting there. I still believe that, the bond situation will rectify itself at some point, and that we'll see, economic, I won't say freedom, but economic natural law take over, where interest rates are forced higher because interest rates are low because the government needs them to be low. But really, if we've already been downgraded, we, the United States of America's treasury market, and it should be downgraded again with all these trillions of dollars they're printing out of nowhere. Anyone ethical would do that. So the interest rate is supposed to reflect not only return on your investment, but also the amount of risk that's involved in participating in that investment. And so there's a huge mismatch between the risk that there is involved in the treasury market versus what you're being sold or told on the interest rate itself. It is not in line with the reality. So again, to the stock market, yeah, I'm going to watch it carefully. Fundamentally, I can build a huge case that I have over the years of why it's overvalued and why it should come down. I think it will. I still think that's the more likely case, especially with as much control through the system as we have now. If you see the mainstream financial press, which is part of the mainstream press, I think before the election, it would probably be in their interest to see the stock market have a huge sell-off, and then, of course, pointed at the current administration. They're all to blame for this. Look, we need somebody new. But and I hate to be political at all, but I also have to be truthful about how the financial system is basically one mass manipulation at this point in time.
Absolutely. And as you're talking about the mass media, Chairman Powell is set to deliver a quote-unquote profoundly consequential speech changing how the Fed views inflation. We're speaking on Wednesday, and that's supposed to happen tomorrow. So do you think that there's going to be anything in that speech that will surprise anybody, or is it basically kind of how we were talking in the first answer, how the Fed is basically out of bullets?
That's a great question. I'll hazard a guess at the risk of looking foolish. I've certainly, any leader in any field can look very foolish. I mean, when you break away from the herd, you start moving out on your own and nobody's following you. You look like a crank. And but then a few people wake up and say, oh, my goodness, that's right. I don't want to jump over this cliff. That guy took off, left the line and is going to make his own way. And so, people start to wake up. So I think it could be saying something about going to negative interest rates if necessary. Now, if that's true, then gold becomes even more powerful because now you have a never expiring bond as an analogy. So gold is good for, 100,000s of years. So it never expires. The coupon is zero, but it's higher than the coupon on a bond, which is negative. You're going to get less fiat back. And so it's far superior to hold gold as the stability of your portfolio than it would be to own a bond. Is this true or false? I don't know. Is this what he's going to say? I don't know, but it'll be interesting to see what he says. I have a hunch that there may be something somewhat meaningful. I mean, there's a lot of noise around the Fed and the Fed meeting the FOMC and what they're going to say. And going back to my age, how thick is Greenspan's briefcase and all this stuff. But I don't know if it's going to be profound or not, since they kind of framed it in that context. It's likely they will say something I don't know if it's going to be shocking to me, but it may be interpreted that way by the financial system.
One of the other points I'd like to highlight is why leveraged real estate is going to be a bad place to be and already is so. Some of the research I was doing, you really highlighted that fact. So could you tell us a little bit more about that?
Well, first of all, the commercial paper market is just that. I mean, most of your commercial paper has to do with either, a business like a commercial bond, but primarily it has to do with commercial real estate, shopping centers, strip malls, service stations, anything that's out there in the real estate market that has to do with commercial activity in a large way, even large apartments, everything else. So anything on leverage, I think, is in has a big problem. And the other problem is just the basic economics situation. I mean, the malls basically are decimated throughout the country. I remember when they first started kind of building malls, and they were just like the most popular place you could go. I mean, there were movies and restaurants and shopping and, hanging out and just, coffee shops. I mean, they're just buzzing with activity. Now they're just absolute ghost towns. And so, that's one sector of the commercial market and doesn't make my case totally. But if you go to, let's say, something as standard as rental property, whether it's as small as a duplex, fourplex, all the way up to multi units, if these people aren't paying rent, you might have equity of several $1 million, but not enough cash flow. But you need the cash flow from the rent to service the debt that remains on the property. And if you're not getting that rent, then how do you service that debt on the property? And that's my main point. So I'm fearful that, as I wrote in the April edition of the Morgan Report, and I quoted long-time deceased, left us in 1993, Elliot Janeway, that said the next Great Depression will make the last Great Depression look like a small technical correction. I hope it's not that bad, and it will be different, but we are in the reset. There's no doubt in my mind, or hardly anyone that's in my peer group, and I hate to stay inside an echo chamber. I think even people outside of my peer group can objectively see that things are never going to be the same, and that the lifestyle that we once saw just a year ago will be changing for nearly everyone across the planet. And that's I don't even say if it's good or bad, but it's going to be an adjustment that a lot of people are going to have a difficult time making.
Absolutely. Another thing that's kind of been in the story in the news lately is a story about Warren Buffett actually putting some money into gold. And this brings me around to an idea that you were talking about when trillions of dollars of institutional money starts looking for a home, how that's going to affect the gold and silver market. And maybe give us some context about how small, obviously you're an expert on the silver market, but give us a little bit of an idea of how small those markets are and how much they could be affected by a little bit of that institutional money really starting to poke its nose under the tent and look for a safe place to hide.
Well, if you go back and look at generation previous, really, and see what the asset allocation was, and I don't know if these numbers are valid, but the idea is that in 1968, about most investors had a 5% weighting to the gold market. Now, that could be both in equities, and there weren't even ETFs at that time. And now it's globally less than 1%. And the silver market represents 0.02% of the financial markets relative to the amount of money that's out there. So if you got about $200 to $400 trillion that's going to be seeking a home here, let's say over the next year and a half, then what I've said, and I haven't said it publicly too often, is that the top tier cash-rich unhedged mining companies that are in my top tier of the Morgan Report, they'll look like penny stocks. I mean, if you can think that, what Buffett purchased was about 0.5% of Berkshire's holdings and the amount of stock that was, then you start to get an idea of when more money starts to flood in. They're not, Buffett is not going to be interested in any of the junior miners. He can't. He can buy every one of them, and that would be like adding sprinkles on top of your yogurt that you bought at the yogurt shop. It means nothing, really. So you will see that a run to gold. You'll see it in all aspects. Silver, of course, will be right there with it at some point, and it's already starting to move, as we know. So it's a safe haven, money of last resort, and it's going to be sought because there isn't really too many other places to go. And it's just now beginning. I mean, Buffett may be, we may look back 6 months from now and say, oh, well, that was the tipping point. It's too early to know. But if you go back to when Buffett bought silver in the late 1999, he was buying it all for some time, but it was announced then. And he bought about 130 million ounces. That represented less than 2% of Berkshire's balance sheet. So when he put out his annual statement, he didn't even use the word silver. It was under the miscellaneous category. I know because I read it and reported on it. So this shows you it's someone, I forget the numbers. I don't want to be misquoted, but I'm looking at the chart in my head. I think it was something around 60, 70% of what was on the COMEX at the time. I know it was a pretty sure it was a lion's share of what the silver supply was on the COMEX. And yet this is less than 2% of one company. Now, Berkshire's a big company, but so is Tesla or Apple or 3M or General Electric, or, you get the idea. I mean, there's so much money out there. And again, when it gets scared and starts seeking a home, then you're going to see all this capital that's going to be looking for a place to be safe. And I'm looking to see, a huge run. I mean, it's not something I'm really cheering for. I mean, I want to be kind of clear about this. As a true free market participant / analyst / participant, my goal would be to have, a free market where you can put your capital to use and come up with, a better transportation system, and we can all invest in that and, serve the public and serve ourselves at the same time. That paradox where you put your capital to use and get a return on it, but also provide something that's wanted, needed, and, brings better joy to the humanity, but to sit there and just hold on to the money of last resort doesn't really help anything other than your own ability to later on employ that capital to those type of productive enterprises that will emerge eventually. You're trading water, so to speak. Now, as I've said many times, I don't think you should be trading water with all your capital. There's always opportunities, but they're difficult to ascertain, and then you have to determine if they're priced correctly or underpriced and worth an investment or not. But there are opportunities. But you also are remiss if you don't have something that you can tread water with, because getting to the other side with capital to employ is going to be very, very important. And hopefully it's going to be with a bunch of mostly conscious individuals that are there to not count how many digits they've got in their bank account, but look at what we can do collectively. I'm not a collectivist. Let me say we can do perhaps individually a thought, but collect our money together or whatever and provide, for the greater good. So there's a lot to the story, and we're in kind of one of those darker chapters of the story, but the story isn't over yet.
As you were speaking, David, about the big companies like Apple and 3M, even we can definitely use Samsung as an example. When we see this supply crunch coming, when everybody wants to pile into silver, could we see those companies really try to lock down their silver supply so that they have a reliable supply to build their products? And how could that affect that silver market going forward?
Yeah, actually, I think that will happen. And I call it the Great Silver Crisis. And what I mean is what you outlined. Is that right now all markets move at the margin. Where's the margin in the silver market? It's investment demand. If there's a lot of investment demand, the silver price goes up. If there's not much, the price is neutral to lower. However, at least 50% of the market is industrial demand. And yes, I know it's going to be less because of our current crisis, but it still exists. For example, 5G phones are a rebuild. And that's 88 million ounces of silver globally to produce a new phone. Now, some of the old ones will be recycled, but it won't be 100%. So that's just one. And if you look at the solar industry and how many people are getting out of the cities and moving to, rural communities and want to put up their own solar panels to be more independent. So there's a lot of pressure on the silver market still on the industrial side. So what will happen is that as the investors bid the price of silver higher and higher, and it becomes scarcer and scarcer, which is happening as we speak. Then somebody like a Samsung or other entities, Apple or many that use silver, will need to order it, and they're used to getting 2 weeks out or whatever, and realize that it's now 4 weeks or 6 weeks or even 8 weeks, and they will probably have enough in their supply chain to maybe continue their production line, or maybe not. But what they'll realize is that we can't produce without it. And what some people don't know is silver is price inelastic on almost all electronics. And price inelastic just means that there's such a small amount in that phone that it doesn't matter to the manufacturer if silver is $10 an ounce, $100 an ounce, or $1,000 an ounce. They have to have it. There's no substitute. And it's such a small amount, even with $1,000 an ounce silver, which is, I think, beyond reason, at least at this point, still they would pay it because without it they can't have it, and it only would be in that phone. I don't know, I'll make up a number. You get the right idea, $12 or $20, but the phone sells for $800. So it's gone from a $2 bill to a $20 bill. It's gone up tenfold, let's say. It still doesn't prohibit the overall cost of the phone to them because it's insignificant or price inelastic. It doesn't matter. It's such a small portion of the overall cost of the product. So you'll see that run. And once, Apple decides they're going to buy, 6 months to a year's worth of silver and warehouse it so they don't have a supply interruption, then 3M will do it. And once 3M does it, then Ford Motor will do it. Once Ford Motor does it, Tesla will do it. And then it goes on and on. So you see that the industrial side will start acting like the investment side. They'll start viewing silver as an absolute must, not for asset protection, but to stay in business. And they'll start to store it. They'll put it in a warehouse or a vault, and they'll hold on to it because without it, they're out of business. So I think that's a possibility.
That's going to be an interesting thing to see how that plays out. Dave, let's turn a little bit to how the markets are behaving. We've seen recently, let's say in the last 2 months, there was a week where we had a 17% gain in the price of silver. And you were saying that the market is almost behaving as though the shorts are having trouble covering. So why are these big moves so significant, and what is this reminiscent of?
Well, for me, at my age, it's reminiscent of the 70s where, I remember, and of course I was leveraged then. I am somewhat now, but not very much. And, making more money per day in the silver and gold market than I was making in a month at my job. I mean, it's just like, you couldn't get the smile off of my face. It was like, wow. But it's just signaling that the markets, they're called precious for a reason. They are small markets. They are coveted by the extreme as painted by the mainstream financial press. I mean, anyone that looks at the mainstream financial news would look at, skewed looking at the gold people and really at the silver people. But it's really not true. I mean, neither of these has failed as money for thousands of years. The value has certainly changed from undervalued to overvalued to fair valued. But so I think it's just indicative of a wake up. I think it's the fact that as we started the conversation, some amount of people are waking up to the fact that we're at the backside of the power curve. And it's, well, the airplane's going to crash, but when it crashes, how do I get a parachute? And I get a parachute financially by having some precious metal. I think that's about the best analogy I can.
Absolutely. You also speak about, David, of silver being a redemptive metal or redeeming the mistakes of the past. Could you elaborate a little bit on that?
Yeah, it was interesting. I do an article for the Executive Times, I believe the magazine is called, it's usually once or twice a year, and it's called Executive Global. And I was reflective about, where we are, and I thought about multiplicity of definitions for redemption. I mean, it goes, from basically biblical or religious or at least spiritual to financial. I mean, financially, when you redeem something, you're getting paid off in full. And so I thought I'd bring that context up for people to evaluate. I love to make people think. I think that one of the main problems we have is education. People are taught to, memorize and regurgitate. They're taught to believe rather than being taught to think. And you really need to be taught to think and question everything and everyone. I mean, all the premises that we have out there are not correct. A lot of things could be changed for the better, but unless you can evaluate it objectively, which is difficult for a human because we all have some bias, but unless you're taught to think, you just don't. And people think they think. They watch the latest newsreel or sitcom or movie or whatever, and it triggers something probably at the subconscious level, and they think, oh, I've had an original idea. There's very few original ideas on the planet. Take out a sheet of paper, get a pencil, and put down something that's never been thought of before. It's pretty tough. So anyway, coming back to the point, redemption had to do with both. I think that we are in a state of such disarray humanity-wise that we as a whole, regardless of religious beliefs, none to the extreme, need to be redeemed, and I think that the system at large needs to be redeemed. So that was my basic idea that I used to choose those words at the end of that article to try my little effort, if you will, to wake people up to two sides of that coin. The spiritual redemption to keep our humanity during these most troubling times, and at the same time to look at the financial system and how it also could be redeemed. And in my view, I think they go together.
Interesting. Do you think we could see silver do what palladium did, have that parabolic rise and really stay at a decent level from there? And maybe give us a little bit about why that $50 support level is so important, and how you're a lifelong student of the commodities, and how it typically takes about 3 times to really break through a hard support level like that.
Yeah, that you already gave the answer to that one. I mean, most commodities, if there's a certain amount, 50 is a nominal number. I mean, 50 in 1980 isn't 50 in 2011, but on a chart, and not knowing any better, it's the same number, and it is. So it's psychological. I think it'll go through the third time. And as far as palladium is concerned, no, I don't think so. Even though a lot of silver is either industrial, jewelry, or silverware, the last portion and the most important is investment. Most people are buying silver for an investment or looking for a sale at some point, whereas palladium is purely industrial. So if the offtake in silver was 90% industrial or 95% industrial, then it could do a palladium. It could go up, 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 and then it would just go sideways as the supply was meeting the demand at that price. But with silver, you've got a whole lot of investment that has taken place over the years, some new, some old, some in between. And they bought it for one reason, maybe a couple. One, capital preservation. But most people, investors, either at the institutional level or at the private level, are looking to exit that market for paying off their mortgage, sending their kids to school, buying a business, reinvesting, getting their dream car, whatever it might be. So there's a built-in sale on a lot of that silver, whereas with palladium, it's almost purely industrial with a few speculators, and supply is so tight that the industry alone is driving the price.
One of the things that really strikes me as we're speaking about the supply shortages and demand that's really going to come one day is one of the ways you put it is bullion is going to be unaffordable and unobtainium. And the idea obviously behind that is preserving capital. Tell us a little bit about how rare this stuff is going to get and what the premiums reflect in that.
Well, the amount of silver that is above ground is essentially the same now as we're talking as it was, 6 months ago. Yeah, there's been some more mined, but not much in this last 6 months. But the price has been extremely different over those last 6 months. So basically it has to do, again, as we all know, I'm not saying anything that's not known. It's how much is it wanted? What's the demand? And the demand has shot up substantially, as we know. And part of that demand is an industry, because a lot of supply chain comes to the recycling market, which is basically dead right now. So a lot of these manufacturers of silver for commercial purposes with, wire and mesh and shot and the extruded materials and some of these very intricate designs that are used in electronics, they are not getting the feed that they need. So they have to get the silver, or they're out of business, as I said earlier. So they have to go to the general market and buy it really anywhere, from off the exchange primarily, and get it into their hands so they continue the manufacturing process.
David, you wrote an article that was called the 10 Rules of Silver Investing, and recently you've changed it from holding 10% up to 20 to 25%. Could you tell us a little bit about why you made that change in your holding?
Sure. I wrote that, I forget what year, probably approximately 2 decades ago. And You really don't want to go overboard in any one investment. We're taught to diversify, and of course, there's arguments either way. But I actually changed it very early on, really. I think the book had only been out for a few years, and then I was speaking in San Francisco at the Money Show, and I publicly announced I was moving it to 20-25% under the current conditions of what I saw as an imminent war, which did happen. And so I've been at that level for quite some time, actually, although I don't think I can't take back the published version. It says 10%. I realize that. So I did it verbally, and then I've said it publicly for some time. But I think beyond that, you really have to know what you're doing. And, there's a lot of believers out there that have, a great deal in the precious metals and nothing else, and it's their choice. I'm not going to tell them they're wrong. But, from a prudent man standpoint and having worked with a certified financial planner in the past, you really have to be a little bit careful of what you say. So, and really, for most people, the volatility in the metals is extreme. And that's why they have such great optionality. But for most people, if you just put in 10% in gold, let's say, does what it's done over the last 5 years or so, they really wouldn't be that upset because it's only 10%. Whereas if they had half their life savings in gold and it's doing what it's doing and the stock market did what it did, they might be pretty upset. So it depends on the person. It's a personality test as much as anything else, or a sophistication test. There's people that are true believers that have held silver all through this last, 2011 till current times. And maybe they bought it after the 2011 peak at, $30. And now we're sitting a few dollars under that. But if you go to buy it, you're going to pay 30 because the premiums are so high, because the demand is so strong that the premiums in the market are extreme.
Absolutely. David, one thing that I think could use some clarification is, could you tell us the difference between junk silver, like junk bags of silver, versus bullion, and why they both play a role in that wealth preservation?
Well, junk silver is just a term in the industry that means 1964 earlier coins from the United States. And of course, there's junk silver from Canada, et cetera. These are coins that were minted officially by the government for circulation in the monetary system. And of course, that was stopped basically in 1965 in the U.S., and I forget when it happened in Canada. So these are just U.S. minted coins or other governments that are in coin form and are usually pretty worn, and they're sold in a bag market. They're put in bags usually, which is just exactly how they were in the bank, and the bank actually had an asset that backed the monetary system or the money supply. So I think they're really good if we get in the worst case scenario where you want to barter, and let's just take it in a more positive light. Let's just say that you've got some junk silver, I'll call it constitutional silver or real money, and you've got a dime, which today is worth, I'm going to have to wag this, probably $2.50, $3. And you want to leave a tip for somebody at a restaurant or car wash or whatever you do in your daily business. And you might wake them up, give them a dime and say, by the way, that's real silver. It's real money. If you take that to your coin shop, you're going to get 3 of these for it. That little thing is worth 3 of those? Yeah, it is. And so there's the barter, there's the tip, there's a lot of things that leave it to your own imagination. And then on the bullion form, it's just easier for larger investors. These are bars that are stackable, countable. It's pretty easy if you're a big investor to count how many 100-ounce bars you have rather than, weigh the amount of silver in your silver bag collection or whatever. But I think you should have both. In fact, I actually think, and I've said for years, and I haven't said it publicly for some time, that if you're starting out, you're probably best to start with junk silver. That's your best form. The lower the denomination, the better off you are because you have multiple decisions you can make. So if you had, let's say, a half ounce or a 50-cent piece, which, I don't want to go into math, but if you had 1,000 pieces instead of one 1,000-ounce bar, you have a lot of options. Whereas if you have one bar that's 1,000 ounces, you got to make that one decision, and it's got to be right. Whereas if you have that 1,000, units, you might buy some pizza with it, And oh man, I really overpaid, but you still have 999 other units to, not make a mistake with. So I really think unless you're a large investor, you should start small and keep it that way. And if you are large, then going to bullion is fine. You're going to pay a lower premium on the way in, and you'll get a lower premium on the way out, usually. Premiums vary depending on market conditions.
So is that could be part of the reason behind when you say that silver will end up being one of the primary currencies of trading goods and services because gold will just simply be basically too big of a chunk?
Well, what I said was no one wants to be a prophet of doom. And in the worst case scenario, it would be the money of last resort. And I won't take back any of those words, but it's within the framework of like the worst case scenario. Now, are we going to get there or not remains to be determined. I'm not sure. I know right now that somebody in the United States is probably renting an apartment with silver. I know someone in the United States is, making a bicycle exchange for silver. Maybe a used car going on for silver right now, but these are, one-offs. They're not very much doing so. But if it became more, I don't know, popular is the right word, but, came in much greater quantity, it's certainly possible. But I'm not saying that that's going to generally be the case. I don't know yet. But I do know if things got, a worst case scenario. Or let's say there's a bifurcation in the system. Basically, you had an ultimatum that you either had to perform this certain task, and if you didn't, you weren't able to trade in the normal markets, in the normal grocery stores or the real estate market or whatever. And so there could be, I won't say would be, but could be an alternative system where people went out on their own and fended for themselves and decided to use use silver as an example, as a means of doing daily business. So, there's so many ways you can vector off of the idea that you gave me or I wrote about, but I'm not saying it's inevitable. In fact, I'll go on record, I've said it several times, I doubt that silver will ever be put into the monetary system officially, but I've been working with a company that's been doing a silver-backed blockchain for some time, and they just recently added gold, which is fine. I actually prefer it would be just silver, but regardless. And so there's an opportunity as well. So, I always had this kind of imagination that saw the dystopian future in a very interesting way. I mean, you walk out of the house or your apartment with this unbelievable smartphone, and yet, half the restaurants are closed down and the streets are, potholed, and yet there's a few really expensive exotic cars that are flying off the ground, and not even using tires. And then there's the rest of us, kind of thing. And, this is just my imagination, folks. Don't, get too wound up on what I'm saying here. I'm kind of going off on a tangent, but I think we're in a very, very interesting future, and I think the most important thing is, one of my favorite expressions, chance favors the prepared mind. There'll be people that have a pretty fair amount of gold right now that won't make it because they're not mentally strong enough to adapt to the changing conditions rapidly enough. And there'll be others that have very little that are very adept at flexibility, and they're anti-fragile, and they're able to basically morph into whatever the conditions require to stay not only stable mentally, physically, and spiritually, but are able to actually, from that point of view, help others. So it's going to be a very interesting test, I think, going forward, because it's not just a test of the financial system, which is crumbling before our eyes. It's also a test of our basic, I'll call it spirit, that we have individually and collectively. I mean, you've been to places, I hate to talk for others, but let me reframe it. I think we've all been somewhere where we were inspired, be it a concert, be it a lecture, be it a movie, be it a poetry reading, where you came out of there feeling a little bit better, a little bit stronger, a little bit more aware, a little bit more human. It's like, you know what? It's good to be alive. And we don't have that in our culture much anymore. So much is on the dark side. There isn't that much on the light side. And, one of my goals has been, as we work through this, to try my best to give that kind of a message that it's not all bad, it's not all black, it's not all dark, I should say. It's both. And we're out of balance, and we need to get balance back in our lives.
Well, I think that's something you do very well, David. I think your message is really important, and you put a lot of content out there that, as you say, helps prepare people for what's coming. One of the last questions I have for you here is, you were speaking earlier about the top tier cash rich unhedged miners. As you look at your, let's say, investment strategy, are those the only types of miners that you look at, and where do those, let's say, juniors fall into your allocation as an investment?
Yeah, no, I look at them all, and but I weight the portfolio, which many don't, and I do it because it's what works. It's the safest, and it lets you sleep at night. But no, we look at everything. I've got 2 technology stocks that are very interesting. I've got a few silver speculations that are extremely interesting. But I cover the spectrum. I mean, and I've done the resources. I mean, one of the stocks I made the most money in was a moly stock, molybdenum. And no one even says the word anymore. But, we've done lithium and cobalt and copper and all the REEs, rare earths, were one of the first to talk about that as an investment. So we've been across the board. But right now, the market's saying gold and silver are where it's at. I'm really not even bullish on copper right now. We had zinc. The zinc play that we had doubled. It was silver rich, but it wasn't a silver mine. It was a zinc mine. Coming back to your question, no, I look at the whole gamut, but I say, these are my favorite juniors, these are my favorite mid-tiers, and these are provable, the best of the best as far as top-tier companies, and some of those are royalty companies, as you well know. So we've been in business when a lot of these guys have gone out of business because the sector was decimated for so many years, and I don't blame them. I mean, I was just hanging on myself, not to complain, but just the fact of the matter is that our subscriber base was down to like 20%. Well, that's 25% of what it once was. So.
Excellent, David. As we wrap up, do you have any concluding thoughts you'd like to share with us?
No, I think I just go back to what I said previous to the last question. I mean, we collectively, and I'm not U.S. centric. I mean, I think we as a people on the planet have a spirit that is well beyond what we really think about, and to get more in tune with that. And I think other cultures do it better than America. We're focused so much on material world rather than balancing the spiritual with the material. But when you have a financial crisis like we're experiencing, it forces people to re-examine everything that's valuable. And a lot of things that are valuable are not on a monetary basis. So one thing about the sheltering in place situation is it forced families to get reacquainted with each other. Probably a lot of hostility in some. Maybe that hostility broke through some barriers and got some things said and done that needed to be done. So again, I'm a big cheerleader for the strength of humanity. And, some of the greatest of my, I couldn't even fathom how wonderful they are. Gandhi is one of the ones I go to all the time, but, I can't make a difference. Well, tell that to Mr. Gandhi. He can't make a difference, So think about it.
Perfect, David. Obviously, we can find more information about you at themorganreport.com. And on Twitter as well at the Silver Guru 22. Anywhere else you'd like to point out?
Just that, go to the main landing page, themorganreport.com, get on our free newsletter, and then get on a blog. I do a lot of interviews, and they're all free, or not all, but unless you're a paid subscriber, everything that's on there is free on the blog. So you can check that once or twice a week and kind of get up to date. And everything that I do is at the nav bar at the top of the blog, my YouTube, my Twitter, my LinkedIn, everything that I have in social media is at the top of that blog with the icon. So the icon for Twitter takes you to the Twitter page. The icon for YouTube takes you to the YouTube page. So I'll leave it at that.
Excellent, David. Well, we really appreciate your time today. Thank you very much.
I appreciate being there. Thank you.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?